Are you okay? Can we move on? Can we move on and prepare the last statement?
Yes.
Okay. So the last statement, the statement in comparison, it was Damsa Municipal Assembly. Statement of budget information in comparison with actuals. In comparison with actuals for the year ended. Yes. 31st December 2019. So what you do is you take all the revenue and expenditure items, revenue, you take the note, then you take the back, the note. You take the note, then you take the budget they've given you, then you compare it with the actual. You compare it with the actual, then you put down the variance. So you take the budget, the actual, and then compare it to the budget and actual to get the variance. So look in the notes, they gave you the budget. Look in the notes. The last part of the notes to the statement, the last part, the X, they said during the year, the chief donated motor vehicle is X. Extract of the 2019 budget for DMA is as follows. Have you seen the budget? Please, have you seen the budget? Hello?
Yes.
So your own revenue statement, list the items first. In your revenue statement, what are the items you captured? In your own statement, what are the items you captured? You captured what?
IGF.
IGF, and then what? Decentralized transfer, right?
Decentralized.
Donation and grant.
Then donations and grants. So give me your own actual figures first. Your figures you got. Give me first. IGF, what did you get?
52730.
52730. You repeat it. This statement is a simple statement. The decentralized transfer, what did you get?
168250.
And what did you get for donations?
400.
Now look through the budget and give me the budget figures for these items. What is IGF?
102000.
What is the decentralized transfer?
185
And then
000.
donations and grants was what? 1000, right?
1000.
Then you close it. Then you also come to the expenditure. So your own expenditure, mention them for me. Your own expenditure, you can mention them for me. Compensation of employees, goods and services, consumption. Then what do you get? Other expenses, right? Right?
Yes.
Give me your actual figures, your own figures. The compensation was how much?
75250.
Goods and services was how much?
34650.
Consumption was how much?
20930.
Other expenditure was how much?
1700.
Now give me these figures from the budget. Give me these figures from the budget. Compensation.
74300.
from the budget?
Yes, please.
Your actual gave you 75,250, right?
Yes.
That's your own statement, right?
Yes, 75,250.
And the budget was what?
74,300.
Goods and services. Budget, goods and services.
35,600. 35,600.
And then other expenses. Other expenses, budget.
1,700.
1,700.
Yes.
Now, what this means is that what? IGF is a revenue. I budgeted to collect revenue of 102,000 and I ended up collecting only 52,730. Have I failed or have succeeded?
Failed.
Have I failed or I have succeeded?
Failed.
Failed.
We failed. So that is what we call the advert. So you put it in brackets. How much? We failed by how much? The difference. How much is the difference?
49,270.
49.
270.
70.
Exactly. Four nine two seven zero. Now, decentralized transfer. I budgeted to collect 185,000 and I was able to collect only 168,250. Have I done well or failed?
Failed.
By how much? 16.
16,750.
Donations. I budgeted for 1,000 and I received only 400. So I failed by what? 600. So when you have time, then you calculate the totals. Compensation. This is expenditure, so you need to be careful. I wanted to pay 74,300 and I ended up paying 75,300, 250. Have I failed or have performed?
Performed.
No. Hey, this is expense.
Failed.
This is expenditure. This is expenditure. A cost. It's a cost. I budgeted to incur cost of 74,300 and I actually incurred cost of 75,250. It means I failed by what? 950. Are you getting it?
950.
Goods and services. I decided to spend 35,600 and I ended up spending 34,650. So I've done well, right?
Yes.
By how much? 950. Consumption, leave it. Consumption, we don't budget for it, so leave it. And then this one is also dash. So when you get time, then you total it. That is all. This is just the statement. It's a statement you just have to copy. So you don't need to worry so much about statement of budget information in comparison with actual. Are you okay?
Yes.
Okay.
Okay, so this is the solution to the first one. So can we take about some 10 minutes break and come and finish the second one? Can we take some 10 minutes and come back?
Yes.
Okay, so we are breaking for 10 minutes. Then we come and solve the other one and close. I gave you two questions. Which one was the other one? Which one was the other one? Annette, which one was the next one? I gave you two questions. Which one was the other one?
May 2021.
May 2021. Yeah, so let's take 10 minutes. Then we come back. Let's take 10 minutes. Then we come back and solve the May 2021.
And then, please, can you re-share on the page because I don't seem to find.
So, madam, anytime I put the information on the page, just go to the internet and download the question. Finish yourself ahead of the question ahead of time. You can't be in class without the question. Then what are you learning? So we are going on break for 10 minutes. We'll be back in 10 minutes time to finish. We will be back in 10 minutes time to finish the second one.
Along the line, countries between this and all the that lose functions. Because on that of us, I expect to be go back. to make ourselves the level of man. And the same what the chest. Without me, the place was what he meant us. Then on the second thought, I was thinking of buying those electric glass. And I realized probably some of us are pretty good. You have one. I'm thinking of what you think. Why did you do that? They were not this year. I don't know. If you buy the lunch food, you have your car. It's what you come to. Or we share the money every other cases.
Okay, please, your camera is on.
Why are you doing this? No, your money is where is my own? Your money is there. No, where is your money? Yeah. Okay, the mission of it. Because people we get here leave all of where they are own. I don't mind how sure. But I should ask her. Your lady come. I should ask her. Your lady come. Give us your lady come. Well, I'm going
Joseph Bokwe, please put off your camera.
Yes, they're talking about that's immediately. Yeah, we should go. Okay. I'm not ready. Now, because they have to come up with a new one, you can't range of people. But time is coming, you don't come with that. No, you phone this. You know your phone. No. You have your phone. I see I'm happy. I think you still the class. I mean, usually they say that you the play back. This ones I suppose make.
Gabby, please, your mic is on.
Check if the packet has a limit. Who they in the upper? Upper they in there. I don't need one. Get China. I'm not that. Yes, sir. Mr. Eddie, we can talk for factory car no. Asian or can catch them so a jana phone. Mr. Ambrose. Mr. Ambrose, sorry. My name is Ed. News are not for him to take their phone your house. Last night. Ambrose. Ambrose come out. Sound about. The numbers have been going to be the car says the move. That not come out. The car move. You just say it. Like now they call me engagement. Yo, I do. The topic that time. Go ACM justice. Those is the controller. Talk as the left for a year. you look at? My phone, yeah. Come on, I think it's I recall his name. The other number, he must get. He said they should give everyone. There's no like I get. If you go that, because me, I don't know. The last time I called like way 9 ago, I thought you guys, if you get you guys will see, you know, me, I get advice because you didn't hear. Alright. Hello? Don't move over. Don't call me, but I'm not sure. If you go that, don't call me something, I'm not sure. You know, I forget my lens. I read the down to what? I read the down to I can't say I was. You get out. There you go. Yeah. What do you do, station with that? Well, I know the only day you see. No, you got out. Oh, okay. What is it? Very, very. By no manner. Oh. That's yeah. And you are okay. You have a good of for silence. C'est comme quoi tu devais, you know, the bank. Bien say you fit go out of the past. I will do that. You are going to put on for silence. Yes, I'm Sawa. Good morning, all. I've been from yes. I have to go. Oh. Now we have to be able okay, we shall do that. Okay.
Yeah, I think we've had enough break. Can we continue?
Yes, please.
Yes.
Yes, let's continue. So you said the next question is which year?
May 21.
May 2021, eh?
Yes, please.
That was consolidated fund. Okay, so let's go to the rest who are not online. Asiedu, Annette, Frederick, Annette, Francis, Asiedu, Frederick, Ejin, Jiba, Sesi, and then Samsung, Regina, Otoba, and rest. Are you all online? Gabby,
Yeah, we
Alas,
are
and
online.
Francis. All right,
I'm
let's
here.
go. Okay,
Yes, I'm online.
good. So let's go. So yes, May 2020, May 2021. He said, what was the required? The required says, okay, from the beginning. Question 2, it says, below is the trial balance of the Consolidated Fund of Ghana for the year ended 31st December 2020. Then the requirement says, prepare in a form suitable for preparation for publication and in accordance with the relevant financial laws and IPSAS, statement of financial performance and statement of financial position. So we can say, yes, Consolidated Fund of Ghana. So your first page, put the Consolidated Fund of Ghana, statement of financial performance, statement of financial performance for the year ended 31st December 2020.
Yeah.
Ujao.
So leave a full page. Leave a full page for your statement of financial performance. As usual, the note and then thousands of Ghana cedis. Now, for them, for the consolidated fund, we are talking about taxes. Are you getting it? So the revenue sources are direct taxes, indirect taxes. So the tax revenue are direct taxes and indirect taxes. Then we have non-tax revenue. Non-tax revenue. Then we have donations and grants. Donations and grants. Then you go to the expenditure. The expenditure, as I taught you, you remember the acronym CGC. So compensation of employees. Compensation of employees. Goods and services. Consumption of fixed capital. Please write everything down. Consumption of fixed capital. Then public debt interest. Public debt interest. Then government will normally have subsidies. Then grants expenditure. Then social benefits. And then other expenditure. So this is for the central government. So by the end of this lesson, I'm sure you will see the differences between the subvented entity and then the local government and then the central government. Is that clear? Is that clear?
Yes,
Yes,
sir.
sir.
So should we solve, if we solve one more examples on each of the three, it will give you firm understanding of preparation of the statement. Then we come to the interpretation, that is interpretation using ratios and variance analysis and all that. Is that clear?
Yes,
Common
sir.
size and all that. We'll do that so that at least your 40 marks is guaranteed. Then we come and tackle standards. When we tackle standards, you are good to survive the paper. So let us go to the next page. Once you put this down, you go to the next page and say Consolidated Fund of Ghana. Consolidated Fund of Ghana. Statement of financial position. As at 31st December 2020. So non-current assets. So leave about 1.5 page or 2 pages for the statement of financial position, and then let's go and do the workings. Let's go and do our workings. The statement was in what? Millions of Ghana cedis. So write all figures in millions of Ghana cedis. Millions of Ghana cedis. So let us begin. Now let's begin with the trial balance and label all the items. Let's go to the trial balance. We are labeling the item one after the other. Cash and bank is a current asset, right? So write CA beside it. Write CA, current asset. Cash and bank, current asset. Established post salaries. What will it fall under? Established post salaries. Compensation.
Compensation.
Non-established post salaries. Compensation. So write COMP, something to demonstrate that is compensation. Non-established post salary. Compensation. Communication service tax. Is it a direct tax or an indirect tax? It's an indirect tax, right? So indirect tax. Pay as you earn is a corporate tax, is a direct tax. Non-tax revenue is non-tax revenue. So right, the pay as you earn is direct tax. Non-tax revenue is still non-tax revenue. Travel and transport is goods and services. Administration costs, goods and services. Conference and seminars, goods and services. Foreign travel costs, goods and services. Now, the stationary inventory and stationary purchase. Stationary inventory and stationary purchase. You can put the two of them in brackets and then write goods and services. Is that clear? That will be goods and services. And then the vehicle income tax. So vehicle income tax is also what? A direct tax, right? Direct tax. Corporate tax is also direct tax. Now the grants. Look at the grants. There is one on the debit and one on the credit. The one on the credit is a revenue. So that is donations and grants. And then the one on the debit is an expense. Is that clear?
Yes.
So the credit one is an income, that's donations and grants, and then the debit one is grant expenditure. Custom and excise duties is indirect tax. Subsidies for consumption and production, the two of them are subsidies. So label it subsidies. Value added tax is an indirect tax. Social benefit is social benefit. State protocol is goods and service. Allowance is compensation. Allowance is compensation. Domestic debt interest and external debt interest. The two of them will become public debt interest. So you can put a bracket over the two of them and write public debt interest. Are you following?
Yes, sir.
Are you following?
Yes, please.
Then motor vehicle, equipment, computers, railways, and work in progress, they are all non-current assets. So under that, put all of them in bracket and write PPE. Put all of them in bracket and write PPE. Now, equity and security investment is also a non-current asset. Equity and security investment is a non-current asset. Loans and advances is a current asset. Loans and advances, current assets. Gold and other reserves is also a non-current asset. They are financial assets. Gold and other reserves, they are also financial assets. That is non-current assets. Judgment debt is goods and services. Judgment debt, goods and services. Yes, treasury bills. Treasury bills is a revenue. So what will it fall under? Non-tax. No, it's a liability. Sorry. Treasury bills is a liability. The government will pay. So please watch. Since this is a consolidated fund, it's for central government. So if you see treasury bills, it means the government has issued treasury bills. Are you getting it? Are you getting it?
Yes, sir.
So that is a liability. So the treasury bills will be a liability. Domestic debt will be a liability. Payables is a liability. External debt is a liability. Trust funds and deposit, that is fund. Trust funds and deposit, that is funds. Other expenditure is other expenditure. Rent receivable is receivable. Accumulated fund. Accumulated fund is debit, so you can put into bracket negative. Since the accumulated fund is debit, you can write negative in bracket. Are we okay?
Yes, sir.
Are we okay? Are we okay?
Yes,
Yes,
sir.
sir.
So
So
now we
yeah,
can
fine.
go to now we can go to our workings. The year is what? Is that the year is what? May 2021 or November 2021? May 2021. Okay. So now we can go to the workings. So let's go to the footnote. Note 1, it says, it is the policy of Controller and Accountant General to use the accrual basis of accounting preparation of public accounts for the consolidated fund in compliance with Public Financial Management Act 2016 Act 921 and the Public Financial Management Regulation LI 2378 and the International Public Sector Accounting Standards. 2, inventory in respect of stationery outstanding as at 31st December had a cost of 18 million and a current replacement cost of 12 million. Meanwhile, the net realizable value of inventories is estimated at 14. Now, this is central government. So if government has inventory of stationery, are they selling it or using it? This is central government. If they have stationery, are they selling it or using it?
Using it.
They
are using it. So we'll measure the inventory at the lower of cost and replacement cost. Is that right?
Yes.
So 1, let's say inventory. Inventory of stationery. You see that as you are solving the questions, you are getting experience. Is that not it?
Yes, please.
So the cost is what? 18. Compare it to the replacement cost. What is the replacement cost? What is the replacement cost? 12, eh?
Of
So the valuation will be 12, right? Remember, we are already working in millions. So the valuation is 12. That's all. Let's move to the next one. Note 3. An established post salary in arrears as a result of salary increment in the fourth quarter of 2020 was 56 million. So there was established post salary in arrears. So open established post salary in arrears. So go to the trial balance and give me the opening balance of established post salary. Then we add the arrears to it. The arrears is a payable. The arrears was how much? That's 56. Please go to the trial balance and give me the established post opening balance. Established post opening balance. Please get involved. Get involved. Don't leave the work for me.
13.
Established post.
13,524.
524.
13,524. Please, 2 people should confirm the results. 13,524.
Yes, please.
Okay. Then apart from that, so once we have gotten this, we have to send the payables to the payables account. Is that clear? Is that clear? Send the payables there.
Yeah.
Established post. So established post salary in arrears, which we got in working 2, is 56. But the established post itself is also compensation. So let's send it to with 4 compensation. Are you following what I'm doing? I don't want to miss anything. So once I take the transaction, I'll treat it wherever I'm supposed to treat it. Is that clear?
Oh, what is that?
So establish post. Now add this for me. Please add this for me. 13,524 plus 56. That's 13,580, right? 13,580. So the 13,580. Please, whose background is that? Control yourself. If you are talking to somebody, then mute yourself.
It's 13,580.
13,580. That's compensation. Are you getting it? Once I get the transaction, I treat it wherever I'm supposed to treat it so that I don't forget anything. Is that clear?
Yes, please.
Okay. Then it continued. It said, and public debt interest outstanding as at 31st December amounted to 14 million. So I can go and calculate public debt interest. Public debt interest. So go to the trial balance and go and give me the debt interest. Go to the trial balance. The debt interest, there are 2, public and domestic debt interest also. Look for them. Domestic debt interest, external debt interest. Can you see?
Yeah.
Domestic interest. How much is the domestic interest?
2906.
External interest.
348.
3482.
Who is that? Whose background? Let me check. Whose background is that? Please, if you know you are having a conversation with somebody behind, discipline yourself and mute. You cannot disturb the whole class. Be disciplined. Yes. Then the arrears. Yes, the arrears. They said arrears is how much? And public debt interest outstanding was what? 14, eh? 14, right? So you also add it to the payables. Public debt interest, which is in working 5. And then the value is what? 14. Please, are you following?
Yes, please.
The moment you take the transaction, treat it wherever you are supposed to treat it so that you don't forget. 14. Okay. Then consumption of fixed capital. Let's go and calculate our consumption of fixed. Can we move? Can we move?
We are moving. Sir.
Yes. Yeah.
Yes.
Okay, so 6. Consumption of fixed capital. Yes, consumption of fixed capital. Mention the items for me one after the other. We have motor vehicle. Motor vehicle, they say 5 years. So something over 5 years. Then equipment.
1,800.
No, let's do all this first. Equipment is 10 years. So a certain value over 10 years. The next one is what? Computers. So computers, a certain value over 5 years. And then railway to a certain value over 20 years. Now go and give me their costs. Go and give me their cost. Motor vehicle. Go to the statement. Motor vehicle,
800.
4,800. Equipment.
Equipment is 8,400.
8,400. Computers.
Computer is
18,000.
1,400. 1,400.
Railway.
5,000.
5,000.
5,000. Okay. So let's go on. When we are coming to the additions, we'll do them. Leave enough space. There can be further assets. So leave one and let's go. 5. The multinational partners have extended their debt forgiveness policy to the government, which has resulted in external debt write-off amounting to 4 billion in the year. So external debt. Go and give me the opening balance of external debt, not the debt interest, the debt itself.
Page 2. Yes.
How much? External debt.
45,726.
Please, we are not talking about the debt interest. The debt interest is different from the debt itself. Is that clear? And they said the debt forgiveness is how much? 4 billion. So debt forgiving. So they are forgiving us 4 billion. So that will be 4,000. It will reduce it, right?
Yes.
Meanwhile, this 4,000 now, if you are owing somebody and the person decides to write off a certain amount, do you know it's equivalent to the person giving you a donation or a grant?
Yes.
Yes,
Are you
sir.
getting it? So that 4,000 is a donation. So you go and enter it in donations and grants. So 8. You call it donations and grants. Donations and grants. You can come to
Sir.
debt. Yes.
Sir, does that
Yes.
mean that you can write it off here and forget it? Assuming where you are working, then I choose to write the 4,000 here and forget it because it has affected the financial.
Is that it has done what?
It has affected the financial statement. You know, they are forgiving 4,000, and I choose to deduct.
When you choose to what? Yes.
I choose to deduct it from my debt.
Mm-hmm.
Then I didn't write anything like donation. I've forgotten something like donation. Will it affect my financial statement?
Yes, it will affect because you will not get a donation figure correct.
Okay.
So if there is any donation, is there any donation in the trial balance, the grant? It was in the trial balance, the grant income. Then you add the debt forgiving. 4,000. Now go to the trial balance, the grants, the credit one, which is the income one. We saw some grants. Where is the grant? We saw some grants in there. In the trial balance, we saw some grants. Yes, the credit one is in the first
The
table.
credit is 2516.
2516. Very good. So 2516. And then this debt forgiving is in working 7. Meanwhile, this external debt is a liability. So add them. Subtract the 4,000 from it.
11726.
Then donations and grants. Don't close it. There can be other things. So let's leave it. Is there another footnote? Yes. In the year 2019, 8 billion was spent on acquiring equipment to boost government projects. However, these transactions were recognized in the accounts as goods and services expenditure in 2019. This error has since not been rectified. So it means that there has been a new equipment that we bought. So it will also depreciate. New equipment. It will also depreciate.
Question mark for you, no.
So new equipment. How much is the equipment? 8 billion. So 8,000. Meanwhile, equipment is depreciated by 10 years, right? Right?
Yes, 10 years.
Good. But then, now what this particular footnote, watch it carefully. Please, those of you who are not listening to me, listen to me so that later you won't come and say, oh, Bishop knows this and he didn't tell us.
Yeah.
Listen carefully. Hey, whose background is that? Please, for God's sake, you are mature students. Let's respect ourselves. If you want to have a private conversation behind, mute yourself. You cannot unmute yourself and be having private discussions to go into the video. You don't do that. Okay, so now this is what you do. Take note of this particular footnote. If equipment was bought in previous year and it was treated in goods and services, it means that instead of treating it as an asset, they treated it as an expense in goods and service. So it has reduced the profit. Do you agree?
Yes, sir.
So it means that last year's profit was reduced. It was understated. And then the last year profit is in the accumulated fund. Are you getting the point?
Mm-hmm.
So what it means is that in the accumulated fund, let me come here. This particular question, anytime it is asked, students can solve. So watch this very well. In the accumulated fund, I'll do this. In the accumulated fund. Now give me the opening balance of the accumulated fund. The opening balance of the accumulated fund per the trial balance. It was a negative of what?
29516.
29516 negative. This is the accumulated fund. But then there is a prior year adjustment.
Mm-hmm.
Now, the prior year adjustment was that we reduce the profit by the equipment of 8,000. So we'll add back that equipment of 8,000. Are you getting the point?
Yes.
Are you getting the point? Please, do we all understand?
Yes, yes, yes.
Now, when we add back the equipment will also depreciate. So the depreciation will also reduce it. Do you get it?
Yes, sir.
The
Yes.
depreciation of the equipment is 8,000 divided by 10 years, which will give you what? 800. So it will also
800.
reduce it. Are you getting it?
Yes, sir.
Before you work your operating statement and come and add the surplus or deficit. Are you okay?
Yes.
Please
Yes.
take note of this particular footnote, especially for this diet. Don't say I didn't tell you. Don't say I didn't tell you. Now, the rush hour you are doing early in the morning and solving past questions, the rationale behind this, let me tell you before it's too late. You know, I don't teach during the normal class, right?
Yes.
So you must ask yourself that why would they bring somebody from somewhere who is not teaching the normal class and tell the person to come and teach you past questions early in the morning? The idea is that most of the past questions are being repeated. Listen carefully to me. Most of the past questions are being repeated, but repetition doesn't mean they are lifting the same question and giving to you. Similar questions, normally it is just change of figures. Are you getting the point?
Yes.
Normally it is just change of figures. So there is a high possibility that you can even meet one of these financial statements we have prepared, whether the local government or the subvented or the consolidated fund. And so what I'm doing is that I'm taking all the similar likely past questions that I know you may encounter and then solve them with you extensively. I'm not taking a peswa for this. I mean, your organizers are not charging you anything for this rush hour. I have just been brought in to assist you. And so you should ask yourself that if I spend all the time waking up at dawn, teaching you and solving all these questions for you, and you don't pay attention to it, and you go to the exam hall and the things are there and you couldn't answer, do you know you've done yourself a great disservice?
Yes.
You've done yourself a great disservice because somebody spent his time to teach you all this for free, only for you to revise. You didn't revise and you went to the exams and they are there. So a word to a wise is enough. Yet again,
It's in the heaven.
take note of this particular footnote. If they tell you that an asset was bought in the previous year, but it was wrongly recorded as a particular expense, expense means it reduced the profit. Are you getting it?
Yes.
Now, if the profit reduced, the effect of last year's profit in this year's financial statement is what you call the accumulated fund. Do you remember that when we are doing accumulated fund, we take the opening balance and then we add the surplus or deficit? You remember that?
Yes, sir.
So by adding that surplus or deficit, it means that the deficit or surplus in the previous year has affected the accumulated fund in this year's trial balance. Are you getting the point?
Mhm.
So this year's trial balance, you see, the accumulated fund figure you see there, that 29,516, inclusive in that, it has been affected by a certain 8,000 reduction. So to correct it, you add the 8,000 back as a prior year adjustment. When you add it, then the 8,002 was an asset. It might have depreciated during that year. So you calculate the depreciation and also take it out. Are you getting the point?
Yes, sir.
All right, that's fine. So that's fine. So tackle that. So once we've tackled that, let's go to the next footnote. What's the next footnote? I think it's finished, right?
It's finished.
So if it's
Yes,
finished,
that's all.
we can start aggregating our things. We can start aggregating what is in the trial balance. So now let's go to the trial balance and start aggregating them. Cash and bank is a current asset. You know where we use it. Established post, we have already dealt with it here. If you remember, so ticket, established post, we did a working on established post. Where is it? We did a working on established post. Yes, working 2. So ticket, tick the established post. We have worked it already and we have put it in conversation. So ticket, non-established post. Have we done that? No. So
No.
add it to the compensation. Non-established post. Put it in the compensation. Non-established post. Non-established post. How much? How much?
4016.
Communication service tax. That is what? An indirect tax, right?
Yes.
So let's go and open account for indirect taxes. 9. Indirect taxes. Indirect taxes. So communication service tax. How much is it? 5144, right?
Yes,
Right.
please.
Okay. Pay as you earn is a direct tax. So let's go to direct taxes. Direct taxes. Pay as you earn. How much is it?
Pay as you
Pay
earn
as you
is
earn.
6940.
910.
Then we have non-tax revenue. Non-tax revenue. Do we have an account for non-tax revenue?
That's
Do we have an account for it?
231.
No, we don't have an account here, right?
Yes.
So
No.
let's go and open non-tax revenue. Non-tax revenue. Yeah, so the balance brought forward. Opening balance is what? Is what? Yes, non-tax revenue. What is it? 2312, eh?
Yes.
So take it and let's move on. Travel and transport, those are goods and services. So
Yeah.
working 12. Goods and services. Yes, so goods and services. Yes, let's go.
Process it.
What is it? Travel and transport.
Process it.
Travel and transport 468. Now listen to me. In solving this question, I have deliberately left something out. I have left it out right from the beginning. I intentionally left it out. As we are solving, I would want to see if indeed all the 2 questions I've solved with you previously, you were actually learning or you are just following the crowd. So at the end of the solution, let me see who will be able to remember me what I have left out. If you are able to remember me what I have left out, I will give you a personal gift. You WhatsApp me, I have something personal for you. I have intentionally left something out from the beginning. I want to see those students who are actually listening to the discussion and they are following everything from day one. Because if you followed from the first example we solved and the second example we solved, I have left something small out. By the end of the solution, let me see who will be able to remember me. So keep that in mind as we go.
Aswaba.
Okay, so travel and transport 468. What else? Administration cost. Yes, mention it.
6704.
46704.
67.
04.
Then conference and
Conferences
seminars. Conferences and seminars.
2510.
2510. Yes. Foreign travel
Foreign
cost.
travel.
Foreign travel.
1490.
1490. Then, yes. Now, stationary inventories and stationary purchased. Yes. What is it? What do we do with it? The next 5 seconds, if you can't tell me, the offer is gone. What do we do with it?
Inventory.
Inventory.
It's
Inventory.
inventory. Yes.
Okay.
We create the
So you are-
inventory account. So
Mhm.
Okay.
opening,
So all of you.
Then you add purchases to it.
then less the
Then you
closing
left
stock.
the closing stock.
Then you do what? Okay. So
So
all
you
of you.
get
Then add it to
the
the
amount of
services.
Okay, so that was what I left out right from the beginning. And I think me myself I've given you the clue, because when we got to boost and services, it will give you a clue. So this is what we mean. You come here and then you calculate the inventory used. Anytime you calculate the closing inventory, immediately calculate the inventory used so that you don't forget. The inventory used is calculated by finding the opening inventory. So the opening inventory, that's what I've been giving to you in the question. Give it to me. What is it? Stationary inventories, that's the opening inventory. I'm at 20,
20.
20. Then you